So guys, in here I'm going to show you how to use vwap for your swing trading. Now this is how my swing trade workspace looks like. This is the euro-dollar daily chart, is the chart which I use for my swing trades. Now let's go into the indicators and I'll show you how I set up the vwap. For swing trades, I set up the vwap for a yearly vwap, so this is a yearly vwap. And for the vwap to calculate faster, I use data period of 10 minutes. And also, as previously, I don't use the second deviation. I use the vwap, I use the first deviation, but I disable the second deviation of the vwap. I don't really use it in my trading, alright? Everything else apart from that is default settings. So this is the euro-dollar chart with yearly vwap. Now, as I said in a previous video, you don't trade the first 2 months, so January, February, no trade, because you need the vwap to develop. And afterwards you can see that there is a rotation and the price makes a very nice reactions to the first deviations, those reactions right there. This is a little bit above the vwap, but still general area. Alright, so in a rotation, the price tends to react to the first deviations and tend to go back to the central vwap line. Alright, what happened afterwards is the price went past the first deviation into a trend. You can tell trend because the first deviation started to go downwards, and in here you can see very nice reactions to the first deviation. This is the trend setup, vwap trend setup. You can see the price reacted to it very nicely. Now what I see in here is also very nice confirmation. There was a rejection of higher prices, significant volume cluster in here. Now if I zoom it a bit, heaviest volumes being in here, almost exactly at the place where the first vwap deviation was. So that was a very nice confirmation of this volume-based level, alright? Volume-based level combined with vwap. Go short from there. If you trade like this, you'll have a very nice trade. You can also see that when the price went below this deviation again, there were again nice reactions to the first deviation, alright? Those reactions. Now, next example, which I would like to show you, is on the Australian dollar, US dollar. Again, this is a daily chart and a yearly vwap. There was a strong uptrend in here. Let me zoom it a bit. So, I use the flexible volume profile over this whole trend area, and there are some significant volume clusters. First one is in here, so you go long from there. There is a nice confirmation of the vwap. This is the dotted line. A little bit above the long level is the first deviation of the vwap from the previous year. Alright, this is the first deviation. This is where it ended. So this is a confirmation of the long level based on the trend setup, based on this volume cluster. Then there's also a second significant volume cluster in here. And the confirmation to this level, the vwap confirmation to this level, is this yellow dotted line, which is where the previous year's vwap ended. This is the previous year's vwap. It ended in here, so this is the dotted line, almost exactly at this heavy volume cluster. That's a pretty strong confirmation of the long level. Alright, so long from there. As you can see, the reaction was pretty spot on. By the way, afterwards, you can see that the reaction turned when it hit the first deviation and went downwards. Alright, so nice place to quit the trade would be in here before it quit the deviation, because there was a high probability that the price would turn as a reaction to the first deviation. All right. Now in here, there was a pretty cool level. There was a downtrend in here, and within the downtrend, there was a significant volume cluster in here. All right, so this would be a level to go short from. Now, you can also see that the price is below the first deviation. This is the first deviation, and it hits it exactly at this level, at this volume cluster. So that's a very strong confluence. By the way, there's one more. There was a rejection of lower prices, which means that this was a strong support. Then the price went past it. The price went past the support, which means that the support then became a resistance. All right, so the price hit the resistance and reacted to it. So the level was based on the trend setup, confirmed by the vwap, and also confirmed by the support becoming resistance setup. That's a pretty strong confirmation of the level. By the way, there is also one more thing in here. Support, which became a resistance when the price went past it. And also, there is the first deviation of the vwap. So if you went short from there, based on the trend vwap setup, there would also be this resistance above your short level, which could hold your short. All right, it's not that close, but still, it is a nice bonus to have, right? By the way, there was also a nice rejection of lower prices in here, which means that also in here, there was a strong support, which then became a resistance. All right, the price reacted to it in here, then went past it a bit, and there was a reaction. All right, so there were two supports, which became a resistance, and also the vwap setup, all in this general area. All right, so you can also trade like this. I personally prefer if there is some volume cluster created, and I can base my trade on volumes instead of just price action. If you look at volumes in this area, there really aren't any significant volume clusters in there. So there wouldn't be a volume confirmation of the level. But still, as you can see, the level was a pretty strong one. The reaction was pretty significant. Now let's have a look at some examples on the New Zealand dollar, Canadian dollar. First example will be based on a trend setup, volume-based setup. There was a strong buying activity, and within this buying activity, there was this significant volume cluster. The price went away from the volume cluster, returned back. There was the reaction to it. And if you look at the vwap, there was the rotation vwap setup in here as well. So we have the trend setup based on volumes, and also we have the first deviation of the vwap in here, also almost at the same price level. All right, so it's confirmation like that you want to look for. Now another one was in this uptrend. There was a significant volume cluster in here. So this was a level to go long from. And there were two nice confirmations of this level. The first one was the vwap. This first deviation, the price went above the deviation, returned back. So this is the trend vwap setup. You go long from there. And also this level worked as a strong resistance in the past because there was this strong reaction to it. Then the price went past this resistance and the resistance became a support. All right, so we have a volume setup, then we have the vwap confirmation, and also resistance becoming support confirmation. All this makes a very strong level to go long from. Now in here, there was also a strong uptrend, and within this uptrend, there was this rejection of lower prices. So if you look into the volumes in this rejection, you can see that there actually were pretty heavy volumes accumulated there before the start of this strong buying activity. So this marks a strong level to go long from in here. Also, a little bit below this level is this yellow dotted line, which shows that previous year's vwap ended there. This is previous year's vwap, ends here. This is the yellow dotted line, a little bit below the level. Alright, so that's the confirmation you want to look for, and you want to go long from there, right? This is the reaction. It may not look that big, but you need to remember those are daily charts, and this reaction was almost 100 pips, 95 pips, which is quite a lot. Now there is also one thing concerning the vwap I haven't mentioned yet, and the thing is that the first tests of the vwap after a long time work the best. So for example in here the vwap went upwards, there was the trend vwap setup, the price went above the vwap, there was a test and the price went upwards. Very nice reaction. So this was the first test, alright? But the second test wasn't really successful. The price went past the vwap. So in my experience, the first test, which occurs after some time, works much better than the second or the third or fourth test. Now, the same thing is in here. The price goes below the first deviation, returns back, and there is a very nice reaction to it. That's the first test after a very long time, alright? Then the price returns, there is a second test, and it fails, alright? Then after some time, there's again first test, and again it works pretty nicely. Alright, so that's what works better in my experience. Alright, so let's move on a bit. In here the price just went below the first deviation, so there's not really any trade there based on the vwap. But there was this nice rejection of higher prices with this significant volume cluster. Heaviest volumes being in here, and the confirmation of the level is the first deviation of the vwap. Price didn't touch the vwap, but if you are trading using the volumes, which I most of the time do, I place my trades based on the volumes and the vwap is only a confirmation, then you would enter in here, go short from there, and this would be just a confirmation of the level, alright? Very nice and strong confirmation, even though the price didn't actually hit it. By the way, as you can see, the second test in here didn't really work and the price went past the vwap deviation. Now in here there was a strong buying activity, so let me use the flexible volume profile over this whole area. Now there is a volume cluster in here which gets confirmed by the vwap. The vwap is a bit lower, it's this dotted line, it's the first deviation of the vwap from previous year. The level to go long from is in here. So it's not exactly at the level, it's below the level, but still I feel more confident when there is this confluence, even though it's not that close. This was the reaction, pretty nice one. As you can see afterwards, the price again turned at the first deviation and went downwards. By the way, there are also more reactions to the first deviation. For example, in here, there is the trend setup, reaction to the first deviation. Then the price made a second test, which failed, went downwards. And there was another reaction to the first deviation, another one. Then the price went below it. The vwap started to turn downwards, downtrend started. And there was a reaction to the trend vwap setup, alright, in here. So in this case, if you are trading all this, you would have winner from this volume cluster, then you would have a winner in here. When the price went past the deviation, that would be a loser, winner in here, loser in here, because the price went past the deviation, then the price went into a sell-off, so there would be a winning trade from this short, and again a winner from this place. So you would have 1, 2, 3, 4, 5, 6 winners and 2 losers, which is pretty cool if you consider that all those trades were based mostly just on vwap, right? Now let me show you some trading examples on the Australian dollar, Canadian dollar. Again, this is a daily chart and a yearly vwap. In here, the first month and the second month of the year, the vwap was developing. At the end of the second month, there was a trend setup, the trend vwap setup. The price went above the first deviation, went back and reacted to it. It's end of February, so maybe you wouldn't have taken the trade, but it's the end of the month, so the vwap already seems pretty developed, so I guess that it'll be alright to take that trade. Another nice test is in here. There is also sort of confluence, so with the volumes. The volumes were a little bit lower. Volumes were in here. And actually with a volume-based entry, you would enter for a little bit better price, alright? But confirmation of the vwap in here is still valid, even though it's few pips apart. I would still consider it as a confirmation, alright? Now in here, the price went downwards and hit the first deviation. There was a very strong reaction to it. This level was not volume-based. If you look in here, the volumes were lower, so this trade would be solely based on the vwap. Now what's next? In here, there was a strong rejection of higher prices and significant volume cluster in here. Also, vwap and the deviations go sideways, indicating that there is a rotation. Pretty wide rotation, but a rotation, alright? So in case like that, you want to trade inside the rotation and you want to trade like this. You want to go long from there, short from there. There's also the volume cluster in here, so nice confirmation. Also long from there, long from there. Then the price goes into a sell-off. So you may want to trade the vwap trend setup. So you want to go short from there. Then there is sort of rotation, not much happening there. Then the price goes below the vwap again, I mean below the first deviation of the vwap. And in here there was a pretty strong selling activity. So let me use the profile over this selling activity. Right there, there's a significant volume cluster. Also, this level worked as a support in the past. You can see that the price bounced off this level, and when the price went past it, the level then became a resistance. And on top of that, you have the first deviation of the vwap in here. Alright, so you have volume-based setup, confirmed by vwap and confirmed by support, becoming resistance setup. Right, and this is the reaction to it. Now, what we have in here is a rotation followed by a strong selling activity. This is a rotation, this is a strong selling activity. This is the volume accumulation setup. The heaviest volumes inside the rotation are in here. And as you can see, in this place, you have the vwap from previous year, this yellow dotted line. And also, you have the first deviation from the current year, is the gray line. Right? And all meets at this place. So 2 vwap confirmations of this volume-based level. So this is the place you want to go short from. And this is the reaction. Now what happens afterwards is price goes upwards. There's a volume accumulation setup in here. So you want to go long from there. There's also confirmation from the previous year's vwap, yellow dotted line right there. No reaction to the level, only this one a little bit sooner before the level, and then the price goes past the level. So this one would be a loser, even though it looked like a very nice trade to take. Price goes downwards, below the vwap, into a downtrend. You can tell because the first deviation starts to go downwards. Price is below the first deviation, returns back. There's the pullback where it hits the deviation, and there's the sell-off. So this is the place you can enter a short to participate in this selling activity. A nice entry would also be in here. It would be a losing trade, but if I were trading only using vwap, I would have definitely taken this one, and I would have taken a stop loss. Now, what happens in here? There were heavy volumes accumulated before selling activity. So your short based on volumes should be in here, actually a little bit higher in here, because you want to look into this whole rotation with a flexible volume profile. So this would be the place to go short from. This is the vwap confirmation. This is the first deviation from the previous year. So that confirms your short, you go short from there. And this is the reaction. Now the best place to quit your short is in here at the first deviation. By the way, I think that there'll also be a volume cluster in here. Yeah, it is. So this is a strong confluence of the vwap and the volume cluster. So actually you want to quit your short trade in here and immediately after that go long from the first deviation or from the volume cluster. All right. Now what happens next? The price goes back to the first deviation, makes a reaction and starts reacting to it. Only small reactions, but as you can see, the deviation holds it. And when finally the price goes below the first deviation, you can start trading pullbacks to the first deviation. So go short from there. Then from this place, unfortunately in here, the price does not go back to the first deviation. If it did, it would be a nice place to go short from. But the sell-off is too strong, so the price turns before reaching the first deviation of the vwap. Now the last thing I wanted to show you on the Australian dollar, Canadian dollar is the current development. Now there is a downtrend since start of this year, basically. This downtrend. This is the first deviation. There's a test, sell-off, test, sell-off, test, sell-off. Pretty cool, right? You can actually catch pretty nice trade and just trail it for a very long time with this setup. So anyways, let me show you some more examples. The next one is on the Canadian dollar, Japanese yen. Alright, so this is the Canadian dollar, Japanese yen chart. What I wanted to show you in here was this strong buying activity. I used the flexible volume profile over this whole area. There was a significant volume cluster in here. So significant level to go long from was right there. This dotted line is the first deviation of the vwap from the previous year. And it is a confirmation of this level. It's few pips below it, but anyways, I consider it a confirmation of the level. So what you want to do is you want to go long from there, from the volume-based level, and go long in right there. And this is the reaction. It may not seem that big, but it was 90 pips reaction, which is quite enough. I remember taking a profit from this trade actually. I had my stop loss below wick of this candle, so it was in here. and my take profit was with risk reward ratio 1, so it was like this. Now in here the price went above the vwap line, went downwards. Along from there would be a losing trade, but there would also be a one winner based on the vwap combined with support becoming resistance setup. Now the price bounced off that level pretty strongly, so it was a strong support. Then the price went past it, the level became a resistance. Also there is a first deviation, so we have combination of two setups. Let me have a look at the volume profile if there is also a significant volume cluster in there. Yeah, there is a little bit higher, but the volume cluster starts in here. So it would be best to go short from this place where the support became a resistance, and when there is the first deviation, go short from there. Now there is one more example in here. It is the volume accumulation setup. Heavy volumes followed by strong selling activity, and in here you have the first deviation of the vwap. So volume based level, vwap based level, short from there. Alright, pretty simple. Now the last thing which I want to show you in this video is how you can swing trade the stocks using the vwap. So let me show you some examples. Let me go to Adobe, this Adobe stock. Now this is the daily chart of the Adobe. As you can see, there was a pretty strong uptrend, and very nice places to participate in an uptrend like that are if you enter at places where the price makes a pullback to the first deviation. That's the trend vwap setup. So you can enter in here, go long from there. Also reaction in here, reaction in here. Also massive reaction from this place. Then the next year there is a first test, very strong reaction to it. Then there's another reaction. This one is also very nice confluence with the volume profile. As you can see, there was the trend setup, massive volumes accumulated in here, almost exactly at the place where the first deviation was. So that was a very strong level to go long from. There were also reactions in here, pretty spot on a reaction in here. Now then the price went into a sell-off, into a sort of rotation, and the price started to react to the deviations like this, in those two places and in those two places. Alright, so that's how you can trade stocks solely using the vwap. If you add the volume profile, you'll get even better entries than that. You won't get as many, but the win ratio will be higher. Now the last example will be on the JP Morgan stock. What I wanted to show you in here is very nice confluence of the ABCD setup and the volume accumulation setup. Now there was a rotation in here with heaviest volumes being right there. As you can see, there was also a confluence with the vwap. This is the first deviation of the previous year's vwap, almost exactly at the same level as the volume accumulation level was. And let me now use the Fibonacci tool. This is the point A. This is swing point B. Now we move the Fibonacci tool like this. This is point C, so from A to B, from B to C, and from C to D. This is D. AB is the same distance as from C. This is an ABCD setup. I talk about this setup in the video course or in my book. In this case, it very nicely confirms the volume-based level. So the confirmations of this volume-based level is the vwap, and the ABCD setup. As you can see, the price makes a very strong reaction to this level. Alright, so that's how you can use the vwap for your swing trading. I hope you found it useful. I hope that you start trading with vwap. I suggest you start with swing trades because I think that those are easier than intraday trades. They are easier to read, easier to manage, and also you don't need that much time to trade swings. Alright, so that's the end of the video, guys. I hope you like it. I'll be looking forward to seeing you some next time, and until then, happy trading.